While many market participants and influencers are becoming increasingly bearish, I believe the current situation in the crypto market is very bullish. This is because, from a time cycle perspective, we've reached a critical phase. What do I even mean by that? A critical phase, in my view, is when people become deeply uncertain and start losing faith. Right now, many believe the bear market is returning. Others claim altcoins will never go up again. These theories always appear at moments like this right before potential breakouts, according to countless market models. So, none of this is surprising. After the massive crypto crash we experienced recently, plus several turbulent weeks, I believe many investors have given up. That's exactly when people stop viewing the market objectively and rationally. I want to show you a few things today, and I urge you to stay objective, because in markets, objectivity is always rewarded. First of all, we've now reached the point in time where this last window of uncertainty should be closing. Let me show you the Russell 2000 index, which tracks small cap companies in the US, the smallest and most risk-sensitive segment of the stock market. Historically, whenever the Russell 2000 began to rally, total crypto market capitalization rose parabolically as well. We saw the same relationship in the opposite direction during bear markets. That makes sense. The Russell 2000 is a classic risk-on index. Now, here's what's interesting. In 2020, we saw a crash almost identical to what happened in late 2024 and early 2025. After that, the Russell began setting new all-time highs from mid-2020 through late 2021, just before the broader bear market began. If you look at the total crypto market cap excluding Bitcoin and Ethereum, the pattern is nearly identical. You can even overlay Bitcoin's price and reach a similar conclusion. Look like the beginning of a breakout rally. Looking at the pattern, it seems clear to me the Russell 2000 could be preparing for a breakout phase. So, let's also look for other evidence supporting a potential risk-on shift. And yes, there is some. The US dollar index. A weak dollar usually corresponds with risk-on behavior, while a strong dollar signals risk-off. In 2021, when the Democrats took power, the dollar index fell sharply to around 90, its lowest in years, and Bitcoin hit its first major top. If you had sold at that top, the cycle would have worked perfectly in your favor. That's also when the Russell 2000 peaked. Now, we're in a similar situation again. The dollar index has been crushed. Logically, with falling interest rates and looser monetary policy, risk-on behavior should return and the Russell could break out in Q4 2025. That would naturally drive a massive rally across risk assets, including altcoins and the entire crypto sector. This isn't rocket science, it's simply market logic. If small cap companies in the US start hitting new all-time highs, it makes no sense for crypto, the highest beta asset class, to lag behind. Now let's talk about gold. Gold is a classic risk-off asset, and I believe that once gold tops, the crypto market tends to awaken soon after. I can't predict exactly when gold will top, but I suspect we may now be near a local top or already at one. Why? First, the Russell 2000 is close to hitting new all-time highs, signaling improved risk sentiment. Second, across the precious metal sector, especially with gold and silver, risk metrics have gone extreme deep in the red zone of bubble territory. Silver too is at its highest risk score. That doesn't mean gold and silver can't rise further, but we're clearly in a precious metals bubble. Google Trends confirm this. Global searches for buy gold have reached record highs, especially in countries like the US, Canada, Australia, and Singapore. Whenever we see such mania, it often marks a blow-off top. Images of people waiting in line to buy gold pop up everywhere on social media, And what could have fueled this narrative? Probably the recent US government shutdown. When government uncertainty rises, people flee to gold. Now, as reports suggest that the shutdown might end soon, gold's parabolic rise could end soon. In 2020, we saw a similar situation. As gold peaked, that moment marked the turning point for Bitcoin's next major rally. We're also approaching a potentially bullish setup, the end of the shutdown, rate cuts expected in October, and a likely calm statement from Jerome Powell. That could trigger one final, short-term risk-on phase leading into Q4 2025 and maybe even into Q1 2026. Even though we are seeing improving inflation data, the Fed estimates inflation around 3% in September, lower than expected. Even if it ticks up slightly, Powell just needs to stay optimistic, keep his script steady, and markets will respond bullish. Yes, some long positions might still get flushed out before the next major rally begins. Timing this precisely is difficult and often frustrating, but all the catalysts are in place: a weak dollar, potential geopolitical de-escalation, and the return of risk appetite. Historically, uncertainty phases like this always precede breakouts. Only in hindsight does a narrative appear to justify the move, but the setup itself is already visible. Even the Russell's chart looks almost identical to its 2020 pattern, with the dollar weak and risk assets ready to move. So, from a cyclical and psychological standpoint, it seems clear risk-off assets like gold are topping, the dollar is weakening, risk-on sectors like small caps are preparing to break out, and sentiment is at rock bottom. That's historically when markets begin their strongest recoveries. Even if it feels turbulent now, that's always been the case in this part of the cycle. The months between June and October have repeatedly been the doubt phase before markets reverse upward. Soon enough, some new headline will appear to explain it all, but the real cause was already in place. That's why I remain bullish. If you enjoyed this video, leave a like and subscribe to the channel for more honest and objective content like this.